Hi, hello, welcome and good day. Welcome to Real-Time Daily Trading Ideas. It's Wednesday, 15th of August 2018. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. Since August 2018, it's also important to know about the different client classifications. Retail client and professional clients will have a different offer and different levels of protection. For example, retail clients will have an unlimited protection against negative balances. Professional clients will have at Admiral Markets a negative balance protection policy. Check all that out on our web pages like admiralmarkets.com. Yeah, what I said, ESMA, the topic of the year, the talk of the town. If you traded as a retail client before August 2018, you will have the maximum leverage to choose of up to 500. Now it's up to 20 only. For euro dollar, it's up to 30 as a retail client, and as a professional client, still up to 500. So the margin requirements will be different. These two pictures will show it. And if you believe you are a professional client, you can apply for the status. And as a professional client, you still can have a higher leverage. There are some differences. I talked about that already, and you see it also displayed right now on your screen. Yeah, this is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international broker. So my English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. Usually on Wednesday, it's Giancarlo's day. We also have now summer holiday season, so Giancarlo makes some holidays. And we have Jens Klatt. He will be the day trader of today. In the time when Giancarlo is on holiday. On Thursday, it's Marco's day, and on Friday, it's DAX day, our leading day traders live every business day to the same time. Doesn't matter if you're retail client or professional clients, anybody gets the same condition and spreads. So DAX 30 or euro dollar, for example, typical spread of just 0.8 points or pips during the main trading hours without additional conditions. Contact us if you like, call us or send us an email. Also YouTube and Facebook, some of our channels, everything's linked on admiralmarkets.com. Same like information about our regulatory background. So enough from my side. Now it's time for the day trader. And here we have also a picture. Jens, good morning, good day. What's your view to the markets today?
Yes, hello and good morning also from my end. Thank you for the nice welcome, and yes, I hope to be able to give some ideas on the markets today, and some profitable trading setups. We want to have a look at the DAX, one at the EURJPY, and another one on gold. So 3 markets I think are very interesting today. Probably it makes sense to start out with the DAX. And by the way, here, this is the setup here currently for EURJPY already, but we'll go through this a little later on. In fact, I had to switch from a buy stop here to a sell stop order. So usually we use, and you may know this, we are using the purple line here as our trend filter. If we trade above that, we are long. If we trade below that, we are short. So we
Die Stummschaltung ist aktiviert.
Above that level here when the order was entered, and that was why we had initially a buy stop order. Now we have a sell stop order because the last candle closed below this purple line. But you can also see is that all in all, the market conditions are not very favorable for trending markets, and that's one of the reasons why it probably makes more sense currently to have a look at the DAX first and then switch over to the EURJPY. So here's the DAX, and what you can see is that in fact, well, this is a perfect example of how I trade. In fact, so my chart is quite it's very clean. It's very clean, let's say. So the only thing I need is my filter here, which says this is the exponential moving average 50. If we trade above that, we are long. If a breakout out of the open range occurs on the upside, and we are short once we trade below this blue line, and we break out of this open range on the downside. So we are obviously long. That's something you can spot here already. And I want to show you, that makes more sense now to draw the lines here. I want to show you why this is the case. So here, this is the high and this is the low of this range, those two red lines in this case. And obviously we broke out here on the upside first. Once we traded above this blue line, that's why we are long. The parameters around this trading setup can be found here on the website from Admiral Markets. And we want to have a look, by the way, on the weekly market outlook. It was already published on Monday. And here you can spot it already in the headline, gold an attractive seasonal long against 1,200. It might surprise you, because when looking at the current developments here in gold, one has to say, well, this is surprising because we are strong bearish currently, pushing below 1,200. But I'm jumping here with the markets, or in the markets. First of all, this is the economic docket today. We can also probably will have a little later on a look here at the inflation rate, even though nothing spectacular happened here around pound sterling. So pound sterling currently still under pressure, eyeing potentially 126 on the downside, since inflation came in as expected, isn't capable of underlining the hawkishness in the statement from the Bank of England, which means that the current momentum can be found on the downside, which means the overall advantage should be expected to stay on the downside. And so the target stays at 126. But what we want to have a look at here is the button analytics and then traders block. And here you can see several articles on the right side, see all posts where you can, oh, by the way, not necessary. In fact, we can use this one here from the 8th of August. DAX 30 CFD with the open range breakout. Why is this important? Because this article here in the traders block covers the 3 steps you have to go through to formulate a trading setup for the DAX based on the open range. And this means we go through the first step, defining an open range between 8 to 9:05. Why 9:05? Why don't we take 9 a.m. German time, which is the time when the Xetra market opens, so when spot markets opens? That has something to do with lots of liquidity volume pouring into the market at 9 a.m. German time. And that results in quite choppy market moves here, pushes on the upside and on the downside. And the chances are high that you get triggered into a trade by coincidence and not because it's a significant break. And that's the reason why I want to filter this volatility out here around the market opening. And that's why I wait for the first 5 minutes to pass and then enter the trade. This approach is profitable. Check out the YouTube channel from the Admiral Markets. There we had a webinar on this, and there I presented also some results on a back test here. So what we do is we look for the high and low, 8 a.m. till 9:05 a.m. German time. This is exactly what we're doing here in this case. So this is the first candle, 8 a.m. German time. This is the low. And then you look here at this candle, 9:05. This is this one, okay? There you can see that this was obviously the high then. Yeah, and after we have the high and low, we identify our advantage based on the 5-minute EMA 50, meaning if we trade above, only long setups are considered. If we trade below, only short setups are considered. We had cases in the past where, for example, the open range was defined, and then we broke out on the upside, but there was no trade because we traded significantly below this 5-minute EMA 50 here. So that's one of the reasons. It doesn't happen that much, that often, but it happens from time to time. And yeah, based on that, today, obviously, we favor the long side since we're trading above the blue line. We break out on the upside, break out of this open range. So we have the long trade entered here. Our initial stop is placed at the low of the range. And now we wait, hopefully, for further momentum to develop. I'm very happy, in fact, that the breakout occurred on the upside, even though the overall momentum cannot be found on the upside today. This is, to me at least, a kind of surprising, because when I draw my picture for the trading day today, so when I did my research, this is the DAX now, and I've obviously scaled aggressively out of, or zoomed out of the chart here. The interesting thing is that after yesterday, I started to become quite bullish for the day after the DAX or the bears failed to push the DAX significantly lower here. So let's zoom into the chart. Probably that makes it even more obvious what I'm talking about here. So these are the lows from Monday in this case. Yesterday we pushed lower and then reversed sharply higher. And this low, this lower low, even though it's not a very significant one, it goes hand in hand with something we call a bullish divergence. So if we now enter a relative strength index here, the RSI, a standard indicator, what you can see is that obviously we make lower lows here slightly, but nevertheless it's lower lows, and then they are not confirmed in the RSI anymore. And this is a bullish sign in my opinion. And the line in the sand on the upside, unfortunately we failed in the morning to clear or to make it back above 12,450 points. But all in all, I think there is still enough optimism, let's say, in the markets right now that the situation around Turkey, emerging markets starts to to calm down a little, let's say. So even though in the morning there was a statement released. One second, let me just scroll down here on a second screen. Turkish court rejects lawyer appeal to release U.S. Pastor Brunson. So that's something which is not that positive, but all in all, I think chances are good that rather sooner or later there will be a release of this pastor from the U.S. then, and who is currently in prison in Turkey. And with this in mind, chances are good that probably optimism starts to build, based on which we have a good chance that equity markets could start to push higher. That's, by the way, also something you can see in dollar Turkish lira, for example, currently pushing back towards, and in the morning already below 6 again. And this is a first sign that here, obviously, the momentum on the downside potentially diminishes, and markets seem to anticipate this already. Nevertheless, from a market or price action perspective, we need to make it back above 12,450 points. We are already long. I'm positive, so I'm happy to be long in this current market conditions. Nevertheless, on the other hand, if no optimism starts to come into the market and push the market significantly above 450, and we fall below the current daily lows where our stop is placed here, the intraday lows, then on the other hand, chances are good that we see another push lower towards the lows from yesterday, 280 to 300. And then you don't want to, obviously, you don't want to be long anymore. For a short setup, nevertheless, we have to wait for a certain structure to develop then. So currently, even though this is not the optimal picture we get to see here, chances are still good that there will be a break higher than in the DAX, and that we push towards 12,500 points. I don't think so. The question here from Francisca in this case is, don't you think that the higher lows in the RSI has been broken now? Not necessarily, right? So you can, one second here, you can draw this line. So I think it's a close call. Could be that we are probably pushing then below this level here. You're 100% right. Nevertheless, currently, I think this bullish divergence is still in play. So I'm still positive. But nevertheless, if we break here below this red line, and in this case, and on top of that, which is likely then that we make new intraday lows, the long side is definitely not to be favored anymore, which goes hand in hand with our stop loss currently placed at the daily lows here at 12,363.5. Okay, yeah, that's it on the DAX in this case. Let's have a look here now at our EURJPY. And let me just. Okay, that's not so cool. What just happened? Oh. This is interesting. Okay, so probably I'll just take this out then. For what? Yeah, okay. So whatever happened here, okay, that's obviously a problem here. Okay, yeah, there seems to be a little mistake now for whatever reason. Okay, but nevertheless, the order is entered, so it does not affect the order at all. Yeah, I've already given an idea on the setup here. It's a simple, it's the same and simple approach, similar approach as we favored for the DAX here, a setup which is based on a range, an Asia range breakout, we can call this. So you define also here a high and a low. These two blue lines show you exactly that. Now here on the right side, you have the high and the low, and then you can say, okay, we have a trend filter, which is this exponential moving average 11 in this case, similar to the DAX approach. We trade above that, breakouts on the upside are favored. We trade below that, breaks on the downside are favored. And then we obviously work also here with the take profit level, in this case of 1.7 to 1. So meaning if our risk in this case is 50 pips here in this case, so from 125.859, this is the low here. Once we break below that, the short order is entered. The stop is placed above the high of this range, this 126.364. You have to then calculate the difference between those two, which in this case is 50.5, in fact, 50.5 pips, and you multiply those 50.5 pips with 1.7. It's exactly what we'll do here. One sec, please. So calculator, let me just open it, and here, there you can see it. So if you multiply now 50.5 with 1.7, then you get 85.8, 85.9, and this is here then the take profit level on the downside. So if you now say 80 point, in this case it's in fact 86, I've rounded it up to 86, you can see it here that the take profit then can be found at 124.99. This is our take profit level. This is the second setup. By the way, this setup goes hand in hand with the risk off move on the downside, more likely with the risk off move. By the way, it also answers the questions from Tudorel, who asked, what do you think about EURUSD? Will it go down much more? So obviously I'm not focused on EURUSD, but on EURJPY in this case. But currently, also from a systematic approach here, I definitely favor the short side. If this really plays out here and euro breaks lower, also towards the JPY, against which it trades lower, this is potentially something which could definitely favor also a drop in equity markets, by the way, which now comes as a surprise to you because we are long. So currently the situation is, it's a close call. So we are not really bullish, even though I'm quite positive for equity markets. Nevertheless, from a systematic approach here, there's also a good chance that the short side is triggered. Further weakness in the euro, by the way, also probably something which is bullish for the DAX. On the other hand, if the euro is bearish against the JPY, which is usually a carry trade or a currency which you use to fund carry trades, and you see an unwind of carry trades usually in a risk-off market environment, this is then something which is bearish for equity markets. So in fact, it's a close call. The only thing you can really say is just focus on the system and trust the system. It will work out or it won't. That's just all we can say. What we know is that both approaches are profitable, and this is what long-term success in trading then goes hand in hand with. And I want to now, on top of that, also have a look here at gold, which keeps on dropping, by the way. So we are now down to 1,186. But nevertheless, and this is something you can find on the website from Admiral Markets. So we probably don't want to have a look at the chart right now, or probably we'll have a look a little later on into the chart. But please check the website from Admiral Markets, and here analytics and data traders block with the weekly outlook from Monday, because here at the end, and I'm covering the DAX, dollar, euro, GBP, but also gold at the end. Check this last paragraph here. It covers all the details around the seasonal pattern, which started from yesterday onwards. So yesterday, with the closing price, Tuesday, 14th of August, we had our long trigger, let's call it. And from here, from the 14th of August till the 7th of September, over the last 20 years, within the last 15 years, so in 75% of the cases, gold traded higher with an average gain of 29.77 USD per ounce and an average loss of 14.7 USD per ounce. Nevertheless, a max drawdown of 55.24 USD. There are several other reasons to become positive for gold. For example, a very, very or the least net long position. That's probably better to say, to put it. The least net long position in gold over the last 12 months minimum, or it's in fact nearly 2 years, 2.5 years here. So from which we can see that after we saw such a development here, there was usually a sharp spike higher. And that's something you can spot over a quite long period here. And if you combine the seasonal pattern currently in gold plus this picture in the Commitment of Traders report, gold starts to look interesting from a long perspective, even though you have to say, well, this is a clear downtrend. So what do we have to wait for to get to see a reversal or a chance that now the lows have been seen? And when looking at this here, I think line in the sand currently on an hourly chart can be found here around 1,199 USD. So if now gold starts to trade higher from here and starts to build a sequence of higher highs and higher lows and then breaks back above 1,199 USD, long setups start to become really interesting. And let me just show you finally a thought here on how this could then look like. So this is the line in the sand. And now imagine the following: gold starts to trade higher. This is not enough right here because we still are in a bearish mode overall. And then gold probably goes for an attack of this level. If it does, nevertheless, nothing has changed. The picture is still bearish. And if we break no higher from here, a pullback towards these highs is our wake-up call, let's say. And this is the moment when a long setup in gold becomes really interesting. So if such a structure now develops and the market really clearly shows that it doesn't want to push lower, probably the momentum in US dollar starts to diminish on the upside. Things start to get really interesting. And the good thing about this is, by the way, that here in, where do you have it? That here in the seasonal pattern, we have a quite long time span of nearly 1 month. So gold has some time to develop such a structure. And if it does, if it does, well, then I think it's a very interesting setup. And gold probably has then a good chance to push significantly higher from these levels then. And this is the third idea. It's not a day trading idea. It's more a swing trading or a seasonal pattern idea, which can develop over the next weeks here. Nevertheless, definitely something worth watching, because what we know is that gold has a tendency to show some strong trends developing, some significant push, not only on the downside as we currently see, but also on the upside. And that's definitely something worth watching, I think. And that's it from my end. So
Die Stummschaltung ist aufgehoben.
that should be answered. Yeah. So happy trading then from my end.
Thanks for today. 5 days a week, 5 different traders. So tomorrow is another day. If you'd like to join us tomorrow, same time, same place, Admiral Markets is there for you. And if you'd like to see that again from today, a couple of hours later, it will be available on our YouTube channel. So just visit youtube.com/AdmiralMarketsFX and you will find everything about that. Thanks a lot. Greetings from Berlin office. All the time, good trades, and see you hopefully tomorrow. Bye-bye.